Good afternoon. This is Michelle Savage with XBRL US. Thanks very much for joining our webinar today on FDTA impact on municipal bond investors. Just a couple of logistical points for any of you that have technical difficulties as we're going through the program. Please send us an email to support, SUPPORT, @xbrl.us. And as we go through the program, please feel free to submit questions through the Q&A link that you see at the top of your screen. And we'll take those questions towards the end of the program. So just to get started, I'd like to introduce our speakers. We have Justin Land. Justin is CEO of AG Analytics. We have Triet Nguyen, Vice President, Strategic Data Operations at DPC Data. We have Jamie Richardson, Managing Director of Research of Municipals at Fidelity Investments, and Barnett Sherman, Senior Managing Partner at 10 Bar Capital. And Barnett is going to be leading our discussion today. First, I'd like to give just a brief disclaimer for all of our speakers. The views expressed by our speakers today are their own and do not necessarily reflect the views of their respective organizations or the staff of their organizations. So to get started, I'd like to just kind of set the stage here a bit for the Financial Data Transparency Act. I think most of you on the call are probably pretty familiar with it, but just in brief, the legislation was signed into law in December of 2022, so just a little bit over a year ago, as part of the National Defense Authorization Act for 2023. And it calls for the use of data standards by members of the Financial Stability Oversight Council, or FSOC. These agencies comprise the Treasury, the SEC, the FDIC, the Federal Reserve, all the way down to the Federal Housing Finance Agency. And there's one aspect of this legislation that is of particular interest to all of us here today, and that is called Section 5823. And that calls for data transparency relating to municipal securities, and it's to be implemented by the Securities and Exchange Commission. So this is a brief look at the timeline for the FDTA. And as you can see, here we are already in 2024. We're right in the midst of the timeline. So the bill passed at the end of 2022. The SEC has been working on submitting reports to Congress. They have submitted 2 reports so far, outlining their use of corporate XBRL data and how that's going for them. And this year, what we're going to see is the FSOC agency will be putting together a rule proposal out for public comment. And this will be covering all FSOC agencies, so it'll be relatively general. Then as we move into 2025 and 2026, the individual agencies will be working on their own specific rulemaking. So for example, the SEC will be working on the rule for municipal bond issuer reports. They will put that out again for public comment during 2026, and then finalize it by the end of 2026. So then in 2027 or a little bit further beyond, we'll start seeing the implementation roll out. So what truly is the impact on governments? First, governments that do have outstanding municipal securities will need to comply with the FDTA. There's no change in what governments are required to disclose. Governments will not be required to submit data in a standard template. I think that was one of the concerns that was raised by some issuer groups, and it's an understandable concern when you hear the word standards. There will, however, be a change in how data reported to the Municipal Securities Rulemaking Board, or the MSRB, is formatted. So that's going to be the big change that happens with FDTA. Other local governments may be affected because of the GREAT Act, which stands for the Grants Reporting Efficiency and Transparency Act. This is a piece of legislation that was passed in 2019 and has not yet been fully implemented, I think in part to COVID. But it's very likely that rule for grants reporting could also have an impact on municipalities, because many of them receive federal funds in terms of grants. So with that, I'm going to actually stop sharing my screen And I'm going to ask our speakers to put on their videos and put on their microphones. And I'm sorry that I didn't do that myself, but I'm not going to bother now. And I'm going to turn it over to Barnett, who's going to lead our discussion. So thank you all for joining, and turn it over to you, Barnett.
Thank you very much, Michelle. And I have to say, I went through the list of our attendees, and it's an extremely impressive group, and I hope we can live up to the standard that I know you expect. First and foremost, I thought just to sort of boots on the ground here, what the financial disclosure process looks like. And to my mind, when I heard this, I candidly was scratching my head a little bit, because it reminded me of unscrambling an egg. I mean, right now, many municipalities and authorities use accounting software, QuickBooks or similar type programs, which generates digital financial data. And then, but when it's reported out, it gets reported out into a PDF, which is undigitizing it. So analysts and investors and researchers now go back in to scrape those documents to put the data back into its original digital form. The term bass backwards comes to mind, but this is, I mean, this is absolutely preposterous for a $4 trillion market with over 50,000 issuers. Some have estimated as high as 90,000 that are coming to market with billions of dollars in new issuance every year. It's costing enormous amounts of money to have this poor disclosure and to have non-digitized disclosure. It certainly is an impediment to any sort of evidence-based decision-making by either the investors or municipalities in general. So, I mean, I think we're all together in needing to find a much better way of reporting out this financial data, and obviously FDTA and the rules and regulations that will come along with that will be enormously important. I'm going to turn this over to the smart people now and ask Triette to talk about some of the kind of data that is submitted to Emma, and what data is reported, what's kind of breakdown, structured, unstructured, and hand that over to you. If you need a minute to think, I can pause, but Triette's pretty sharp. He usually doesn't.
Well, thank you, Burnett. Well, as you know, we were one of the original document repository in the municipal market, also known as the NERMSR. So we've pretty much been at the forefront of collecting all types of disclosure documents as required under SEC Rule 15C-212. So over the last 30 years now, we've been really extracting key data elements from those documents and digitizing them for compliance, research, and investment applications. So when it comes to the potential for reporting in a structured data format, to us, the most obvious candidates obviously would be the financial as opposed to the non-financial types of disclosures, right? And those which are kind of produced with a relatively fixed format and with some regular frequency. So those should include, for GAAP filers, the comprehensive annual financial reports, otherwise referred to as the ACFR. And for non-GAAP filers, you would have whatever the annual financial statement would be, either on a cash or statutory accounting basis, audited or unaudited. And then you have to include all the interim versions of those reports, such as monthlies or quarterlies. And finally, you have a whole host of continuing disclosure reports, also referred to as CDRs. Now, I have to say those probably come in a more disparate format, so they may not lend themselves as readily to a structured data delivery. Finally, I am certainly very intrigued about the potential for reporting budget documents as structured data, because that would really benefit not just investment analysts, but also fiscal analysts, public policy experts, and the issuers themselves could probably have a few more analytical tools at their disposal as they go through the budgeting process. So there's definitely some good potential there. Of course, I should mention there is also a pretty long list of non-financial disclosure, including the 16 categories of material events that probably wouldn't lend themselves to structured data.
Great.
Bonnet?
No, always insightful, Triad. I appreciate it. It prompted me to think about how far we've come in disclosure, and where we're going further now with that. Along those same lines, Justin, I'm gonna tag you in here. What disclosure types are going to be useful here? What provides us liquidity? Does it really mean lower borrowing costs to the issuer? Is there more transparency and clarity with this? How does that fit into the market, and how do investors and issuers benefit from that?
Yeah, I think the financial data is probably, for asset managers, number one. There's lots of other data that's important, security and litigation and things like that. I know from, mostly an asset management background in my career, a lot of small issuers many times get looked over by large institutional investors because it's not worth the time to have to pull and read a PDF and a document and things like that. And it's really my belief that if you can digitize this, if you can use software to analyze small issuers with very little or low touch by human beings, you're going to get a lot more competition from bigger investment shops that might not ever want to look at a $3 million deal or a $5 million deal. So just by the very nature of if there are more people putting in for a deal, borrowing costs go down. I think, aside from asset management, I know I've been contacted by numerous universities looking for data, and they just don't have the budgets to get it. And I think there could be policy implications that smaller issuers over time can learn more at scale from universities or just doing it on their own about how other things are run and how to make better financial decisions. So you have borrowing costs potentially falling, better liquidity for your end investors, and lower prices or lower yields when you go to market. But I think there's a second order effect if policy can change that will save issuers money.
Well, excellent points. And I want to hone in on the benefits that smaller issuers, special districts, for example, fall into that, right? Usually, or issuers that may be infrequent issuers truly do benefit by this and offer a lot of cost savings when they come to market. Jamie, saving the best for last. Sorry, guys. What kind of data are you finding most useful to investors and analysts? How are you using that data today? What benefits do you get from the data? What data would you like to see that may not currently have that would help in your investment decision processes?
Yeah, absolutely. So really, our team is all about trying to establish the context for investments that we're making. As Bernard mentioned, there's a lot of issuers in the muni market. 50,000 is usually the number we hear, although hard to pin it down exactly. And we have, among the larger muni research teams among our peers, and we have 20 people in muni research. So we still can't have everybody look at every issuer in the market. We have to pick and choose, and we're trying to establish context to make sure that we're putting our shareholders' money in the opportunities that we think make the most sense. So I agree with what Justin said. Certainly the financial data is at the top of the list of the things that we look at. But there's also some areas where we've been able to actually get data in a format that's easier to work with. For instance, school districts, oftentimes states collect enrollment data that's actually in sort of a format where we can compare a lot of issuers quickly. It's much harder to do that with financials than it is with enrollment data. So the more that we can sort of move toward that, not that it has to be standardized because each issuer is going to report within constraints what they think is the most important, but the more that can be sort of out there and easily digested so that our team can spend time making those judgment calls and trying to surface the people who are doing the best job running their organizations that we think would be good investments. It's a much more efficient use of time and helps us to make sure we're more efficient than spending time keying numbers from, as Barnett said, PDFs back into digital tools when they were already there to begin with.
Yeah, one thing that I'd focus on myself to offer here is on the effect on pricing and the ability to have more accurate pricing for investors, particularly true with certainly the size of some of the mutual funds in the market with literally billions of dollars under management, but equally important are separately managed accounts with usually an investment advisor overlooking different accounts for individual investors, high net worth investors, are playing a really key part of the market, particularly in smaller, being able to buy, as Justin offered earlier, being able to buy some of those smaller size bond issues and to be able to follow them offers tremendous liquidity for that borrower and opens up a whole new market for them, or if not a whole new market, at least a more expanded market for those issuers with that. So I think all these are really good points. I'm not sure, Michelle, should we be opening this up to audience questions? I think there's a couple of, I see there's one there, a couple other ones came in. I'm certainly willing to go through that. Unless if the panelists have anything to bounce off of each other as to what they said, I'm certainly open for that as well.
Yeah, Barnett, I wanted to just drop in one comment and,
sure.
and maybe Triad or Jamie. I think everybody now talks about AI and machine learning and all these things. And there's lots of amazing things machine learning is finding that were not obvious because there's just too much data before. And I think there may be benefits that none of us on this panel have even thought about once we have access to massive, vast resources of data and combining that with machine learning or AI models and other things. So there may be great things that we haven't even considered that it's just been too hard because of the number of issuers and the number of CUSIPs and everything else out there to drive research, trading, all sorts of things. So I think that's another step that's not obvious, but I think we'll find that out once once the FDTA is finally implemented.
Yeah, it's an excellent point. I think the muni market, as many financial markets, is a perfect test case for how to apply Bayesian statistical methods that, because you're always adding to the information pool and you're constantly updating and upgrading that. And being able to have structured data to pull that from, particularly for researchers and the outcome of those researchers, I think could be really important. As far as AI goes, it's evolving so quickly. I know a question came in the chat. It's evolving so quickly, and to bounce off of Justin's point, it's, what could it do? Well, to hear some people say it can do anything. Well, we'll find out. But for now, we're going to just stay focused on what we're doing here with FDTA and the information we currently have, but certainly are keeping an eye on the AI and how that could be applied here. Triad, I'm sorry, I didn't mean to cut you off. What did you have? I need your mic.
You're muted, Triad.
I just want to add, when you talk about AI, the prerequisite to an AD machine learning application is that you have the database for training, right? So, this will establish that, we give you that raw data for training before anything else. So, I think that's where it's putting together the foundation for, more advanced applications.
Is an interesting question in from the audience, and it notes issuers are not required to create new data, but the main issue here may be reporting comparable numbers. So that requires obviously issuers to potentially calculate information in different ways with that. Thoughts from the panelists on that? I've got a couple of ideas off the bat because I'm fairly certain that GASB is looking to create a more standardized reporting structure for the muni market. So we don't have, what might be perceived as a bit of a Tower of Babel effect. Jamie, interested, or Justin, you want to dive in on that?
Yeah, I can take a shot at it, and certainly
Yeah,
love to
please.
hear Justin's thoughts too. I think that there's sort of two levels of it in my mind. I mean, level one is sort of, let's not have to rekey the data, and then we understand everyone's going to report what they've been reporting before, just in a format that's easier to ingest. I think that our ultimate goal is certainly to get to the point where we are confident that we're comparing apples to apples, but there is some sort of judgment that gets applied there in terms of how to adjust things, or do these numbers really mean the same thing, or can we use them interchangeably? And I think that that's always going to be a little bit of the art more than science of investing in what we do as asset managers. But I think that there's room to probably move in a direction where it doesn't have to be quite so wide open. But I don't think that I wouldn't want to let the perfect be the enemy of the good and say, if we're not going to get a perfectly consistent set of reporting from every single issuer, it's not worth doing, because I think that both the asset managers and there's also data providers who are sort of trying to provide that level setting and putting things on the same playing field. So I think that even just delivering the information to that stage of the value chain in a more usable format would still make things more efficient.
Yeah, certainly I'd be happy to get to an 80% or 85% target, target band on that, and it will improve from there. But let's get to there first and have it be comparable. I mean, I cannot emphasize how important that is, to be able to compare, the apples to apples and the oranges to the oranges. It certainly benefits municipalities, which, while certainly on the surface may appear very different given different demographics and different geographies, financially often are far more similar and far more close. And I think the U.S. Conference of Mayors, recognizes this for cities. It's why there's a lot of information flow between cities as to what's being successful in one or another. And I think that that's certainly something that the financial markets can benefit from, again, both on the borrower side as well as the investor side with that. There's another question.
Brian, if I could just jump in on that.
Jump in, please.
Which just to that point about the similarity, I think one of the great opportunities here is for issuers to be able to really get that attention and lower the barriers to looking at them so that they can receive credit for the things they're doing well. Because one of the trends that we're seeing in the asset management industry is increased investor choice and customization. So maybe somebody has been reading about, risks to public pensions, so they want an account that really minimizes pension risk, or people are focused on ESG factors or environmental risk, and we're seeing this propagation of choices for investors and the offering of products that are really tailored to those individual things. And along with that, there's a lot of potential demand for, if you're, maybe you are running a city that has certain challenges, but you're doing a really great job at managing your pensions, or you've really mitigated the environmental risks that you face. The more that you're able to tell that story in a way that people can access, and even if you're a smaller issuer, still have it make sense to include you in their coverage set. There are just more. It used to be sort of, okay, you have a huge mutual fund, they're going to go buy New York City bonds, they're going to buy state of California bonds and call it a day. I think there's so many SMAs and smaller focused funds now that there's more of an audience for sort of recognizing what people do well and rewarding them with a lower cost of capital for it. And this is just sort of an enabler of that, because the industry's staff isn't growing by as much as the number of products. So there needs to be some way to make up that difference and let people focus on the things that are really being done well out there.
No, these are all excellent points. Michelle, I hope we can transcribe some of these, because I think these are worth distributing and making available to our respected audience with that. As another question came in here regarding the timeliness problem in financial reporting, and we know almost all of this. I know one of my former colleagues, Rich Cicerone, has been writing about this extensively, and there's hardly any city that submits on time. Some numbers are running over 180 days, beyond where their reporting period is supposed to be. How might FDTA and reporting requirements benefit and speed up or make it easier to implement disclosure on a more timely basis?
Triette, that sounds like a you question.
Yeah, I don't think the FDTA really solves the timeliness issue at all. I think the hope that we all have is hopefully if it leads to maybe a more the application that will allow issuers to input their audited data, and at the point of where they generate the data, so that it would shorten that time, that time frame between the audit and the actual release of the data. But yeah, I short of that, I think again, I think we've talked also to some people about maybe tagging the data right inside the accounting applications that issuers are using right now, so that they don't have to do anything additional, and then the data they normally input for everyday purposes automatically gets tagged into an XBRL format. So that's kind of the potential promise of it.
Yeah, all fair points. And there's another aspect to that. If I could touch on it briefly, someone mentioned about reporting. We've been talking a lot about, of course, reporting to the financial markets. But my understanding is that a lot of municipalities and states and even the smaller local districts are reporting on other financial matters through the states, and up to the federal government. So it's not, in having this data organized and digitized and structured and standardized, improves the reporting, not just to the financial markets, but up the ranks for grants, up the ranks for potentially grant applications, for use of proceeds of other funding that comes through from either federal or state government, and allows for a lot more understanding and transparency to speed those processes up as well. So it's not just, geez, I've got to create a report for the muni people, what a pain, and I'm so busy putting money, something together for grants and something else I need to report up, and feeling overwhelmed with that. So optimistically, the standardized data and structured data could resolve a lot of those issues with that.
And Barnett, I think it's important to mention that a number of states are digitizing all of their issuer data, like the Texas MAC. So this is not 100% new, what's coming out. I mean, states themselves have, not all of them, but a number of states themselves have mandated that within their own state. So the wheel does not need to be recreated.
Couldn't agree more. One of our audience members asks about notes that the challenges with the apples to apples requirement, normalization requirement, means changing accounting standards. But we also know accounting standards vary. Sectors, states, some borrowers are very specific, some borrowers are more general. How is our thinking on that? Is there a problem there? Is it just, guess what? We have to create the different channels and we'll do that. Any thoughts, Justin or Jamie?
I mean, I think it goes back to what Jamie said earlier, is if we get most of the way there, that's a lot better than where we are now. So even if we don't get perfect normalization, or this state school district does it differently than this state, we're still 80 or 85% better off than we were before. And once you have all that data in some format, manipulating it and normalizing it becomes much easier than the way an analyst might have to do it now. So yes, I mean, in a perfect world, every issuer would do it exactly the same way, but that doesn't mean you just throw the baby out with the bathwater, just because you do have differences in accounting.
Another question came in, or more of an observation, I suspect, is that issuers right now, have a paucity of staff to deal with existing reporting demands. And the sense is that by doing this, it's going to somehow add to an existing burden. I'm not sure I fully agree with that, but I'm presenting it. I think one of the issues I do understand regarding staff at the local level, it has been increasingly difficult to recruit people to come into government to work in the accounting and to work in the budgeting areas, and that is providing a lot of pressure. My sense is, and there will be others I'm sure have a different view, but my sense is that the more this gets standardized and the more you have standardized reporting and a more standardized process, either A, it could be outsourced, and there's a lot of outsourcing going on already for accounting functions, or B, it would simplify people's jobs because now we've got a structure as to how this gets reported. We're not filling out 5 different forms. It's just one, it clicks and it goes. In fact, much of that data that's there, financial data, is already being generated. So we're not really asking it to generate anything more than what's already being there. All right, I'll shut up now. And anybody else have any thoughts on it? I know it's hard. Get the hook. Michelle's going to put me on mute soon, I promise. So does anybody else have any thoughts on that?
Well, you know, I think there's certainly a lot of duplication, right? In terms of all the reports that state and localities have to file right now, and that alone would save them a fair amount of time and money to just to generate one set of data that can populate, you know, many different typs of reports. So that's one aspect where they that would not result in greater demand on their time and efforts.
Another question in from the audience is the providing the data in spreadsheet format and a certain willingness to do that. But the issue is, how do you label the data? What's the taxonomy? How do we get to a standard taxonomy? This is something I've heard a lot of people from, and I respect that. I respect the difficulty in that, but I'm not sure we need just one standard taxonomy. We may have a very broad taxonomy. It gets back to Jamie's point about let's get to something versus what we have now. But equally, there's nothing wrong with saying that there are separate taxonomies for different types of government entities or different issuers. Am I wrong on that, Chad, Justin, Jamie? But am I?
Yeah, I don't think, you know, given the nature of our market, it's not realistic to think that we're going to end up with just one taxonomy, right? And in fact, for ourselves, you know, in our data collection efforts, I think we have to come up with a separate data templates for almost every sector, because that's always some you know, the differences, and I think that's okay, you know, as long as the data is in digital format, we can deal with that. And you know, and as long as the template is consistent within each sector, I think it's still a huge improvement over what we have now.
And I would add, just to specifically to the point about disclosing in spreadsheets. I mean, I guess in my sort of level 1, level 2, I'd say maybe there's 3 levels. Level 1, you know, certainly providing in a spreadsheet is helpful, and we would appreciate that, but it's not just sort of, can you pull up one issuer's financials together? It's also, can you answer questions like, across a whole population of issuers who are similar, how much did revenue grow or decrease this year? How much did expenses grow or decrease? How much did they spend on salaries, wages, and benefits? So it's that ability to look cross-sectionally that's aided by some kind of a common database that people are filling out, rather than just, all right, now I have to go download 500 Excel sheets and figure out how to stitch them together. That's the step that's aided by sort of a more comprehensive solution than just posting an Excel sheet to Emma.
Yeah, absolutely. No, it's again a fair point. Another question came in about FDTA being implemented, and well, there's a second one actually, maybe a little more interesting. It's, what about local governments that don't actually do their own CAFRs and outsource this to external auditors? I think it kind of goes back to the prior question about staffing with that. Once government CFO I was talking to on this noted that if you really wanted to see the cost of this, the cost of outsourcing actually is proving to be somewhat higher than just actually hiring someone if they could hire somebody. What about local governments no longer doing their own CAFRs and outsourcing this? Is this something that would be beneficial, or send it out and let somebody else deal with putting together all the numbers, or are we still wedded to getting it solely from the municipality? I'm not sure I know the answer to that myself.
I think for think for governments, it just like a business or anything else, it's always a build versus buy, and what's, if you told me it cost me 50 grand to do my ACFR internally, but Triad will do it for me for 25 grand, I'm going to hire Triad. But if it's flipped, I'm going to do it internally. I mean, so I think those are the types of decisions that will be made. And I think, as we talked about issuer borrowing costs going down because of increased liquidity and all that at the beginning, once this is implemented, there may be firms out there that do this and compete with each other, and maybe the fees go lower than they are today to do this, because of technology and things like that. As Triad mentioned, embedding it into accounting systems, and then the issuer, uses XYZ accounting system. They don't need to do anything. The taxonomy is there. So I think we can't look at the FDTA as like on day one, everything's going to magically be solved. I think it's iterative. It's like, you don't just start with the iPhone 15. You start with the iPhone 1, and then you make number 2 and 3, and they get better. And I think we'll see that with data collection and all of that.
It's a fair point. Seeing the market evolve and how this will evolve within the market. I think that there's a question that said, how can you develop basically a common set of data for school districts versus, say, a municipal utility? And I don't know, my short response is you can't, and so what? You want to have them separate. They should be separate. There's going to be some, in the Venn diagram, there's going to be some crossovers as to similar reporting on that. But that's the beauty of the municipal bond market, is it does have a large umbrella to provide capital to a very large host of different borrowers, and it certainly can accommodate that. Any other thoughts on that? Am I off the reservation on that one, or or is it still? We don't.
No, I agree. I don't think when people say
apples
to apples, that they mean comparing school districts to utilities. I think we all understand the market well enough to know you've got to compare utility to utility. I mean, ultimately, investment decisions are across the entire market, but I don't think that that's a comparison that people are trying to make straight up. It's that they're different things, and comparing within categories is sort of, I think, where this would be helpful.
There's another question came in here. XBRL question: will there be a fix for the lack of human readability for non-technical stakeholders that prefer the traditional financial reports? I think we can uniformly say yes and go on to the next question. No, I'm kidding. What's our thinking on that? I mean,
I think it's unknown yet, because we're not fully through what the taxonomies are, how Emma is going to work. All of those things are future questions to be answered. I don't want to say it's becoming, not that retail is dying, but with SMA managers and falling fees, I think, and it's hard to find actual statistics, but I think there are fewer and fewer actual individuals going and buying bonds on their own, like maybe 20 or 30 or 40 years ago. So it's maybe not as relevant. It's Jamie's team and Nuveen's team and all the others that, yeah, they have the computing technology and the expertise. So, but that's something we'll have to watch. And maybe there's a potential unintended consequence of that delivery methodology.
Yeah.
Hey, Barnett, if I could just jump in. I'm sorry,
Yeah,
it's
please,
Michelle here. And just to, I know some of these questions are a little bit technical, and you guys are the investment experts, but XBRL documents can be made in both human readable and machine readable format. A single document can do both. So that's something that's handled. You can also render a document that's in XBRL format into other types of documents like HTML or potentially PDF. So there are lots of ways of using it. So sorry, I just wanted to jump in on that one.
No, I appreciate it, Michelle. It's an important clarification. I guess my sort of off the cuff thinking on it is that with more consistent taxonomies, that these reports will be more consumable by non-technical people, that the information will be more consistent and more understandable. I mean, as Michelle correctly pointed out, we're all investment professionals. We have pored over documents that are hundreds of pages long, CAFRs that, are sometimes thicker than Shakespearean plays. And I'm not quite sure where in traditional non-technical stakeholder can even fathom how to go through all that. And I'm optimistic, just as Justin pointed out, that we're starting at the bottom of the curve here for the technology, and we're coming up quickly. We're starting perhaps at the first Apple phone, and we'll get to 15 with that. As we build through that, and I think a number of these questions will be answers as we begin to apply ourselves towards finding those answers.
Just adding on to that, Barnett,
Please.
To the retail point, I do think that I agree with Justin. There are fewer people out there sort of just mom and pop investors buying their own bonds now. But, to me, that's not still an argument for making it any more difficult than it has to be for them to get information. I think that the platforms, like it's not what my group does, but we have colleagues at Fidelity who operate Fidelity.com and are a broker dealer where you can buy individual muni bonds, and Schwab has a platform to do that, and a bunch of other firms. And if there's a way that we can scalably offer, hey, here are the financials that this issuer reported, and here's where they fit into context of other bonds that you might look at, that's a service to retail investors that all the firms that offer this service are going to compete on to try to have the best platform. But going back to the earlier point, we can't do that by saying, we'll read the document for you and post a summary. There's just too many bonds. But if we have some kind of technical solution where we can offer that opportunity to our clients to have that information presented to them without our judgment overlay, just hey, here's what they reported, I still think that's ultimately better for retail investors than you'll have to open up this PDF and figure out what it means.
I think that's a great point, Jamie, that absolutely on Fidelity.com or Schwab.com, if you had the data, you'd probably make that a better tool for the individuals that want to do it on their own.
I think the point also, Justin, that you added previously, I don't want to overlook it. You mentioned sort of offhandedly that, there's a lot of fee pressure. There's certainly fee pressure on the mutual fund side. There's increasing fee pressure on the SMA side. And the solution is to be more efficient. And the solution is to have better technology and to have better data, be able to use data better. I saw a headhunter reached out to me regarding a municipal analyst position, not for me, thank you though. But one of the lines in there was, one of the requests was, someone should have some data skills. Someone should know how to work with large numbers. That's vastly different from things we've seen previously and talks to how the market is moving forward. And it's an observation, one of the audience members presented here, is that as new rules are put in place, I would think automated solutions will be created to ease the new required process. And I think it fits into that. As people are seeing this trend and things are building, people are already looking ahead as to what do I have to do next and how am I going to find a competitive edge to deal with compressed fees. And as we know, technology wins. We no longer, horses are great, but we don't, when there's a Tesla out there, we're likely to choose the Tesla. Although I'm not sure if I'm going to upgrade my iPhone just quite yet for that. There's a comment here regarding inline XBRL, and Michelle, I may have to tag you in on that one. I kind of know what it is, but I'm trying not to appear more particularly dumb on this one.
Sure. No, that's inline XBRL is the term that's used. I'll put my video on here. The inline XBRL is the term for a document that is both human readable and machine readable, and it's actually an HTML plus an XBRL document, so you can use it both ways. And the standard XBRL is designed so that it can be generated in lots of different formats. So you can create an XBRL document in CSV, in HTML, in JSON, in XML. And that's sort of the flexibility that's designed to help it grow and expand and change as technologies change. Like as you were all saying, XBRL is not it's not going to be the same 10 years from now, 20 years from now. And so, it's designed so that it can change and adapt to new technologies that evolve.
Got it. Thank you. I appreciate that's a good explanation. Geez, even I learned something today. Who knows? Hope springs eternal. There's another question about GASB comes in. Is GASB helping establish the municipal taxonomy, or at least approving it so it can be more standards based? When I spoke with them, the answer to that was yes, but if others are more familiar with that, please jump in.
Yeah, I think a couple of us are Justin and I are on the National Federation of Municipal Analysts Working Committee on the FDTA, and I think we've, as part of we put out a position paper on this, and in it, I think we do endorse the GASB as being the right entity to come up with the taxonomy for implementing the FDTA, and because I think they probably are the best equipped to do that, at least in our view.
Yeah, I think that's the right response. There's another question came in here. This is actually kind of interesting. It says, how will FDTA assist, say, a small park district that really goes out, for bond issuance and it doesn't have a lot of issuance outstanding? How is FDTA going to actually benefit this? I mean, it's a small borrower, they don't have large capital needs. Is it going to be, why do I need this?
Sure, I can start on that one. So, I think one of the challenges for a park district is maybe how similar or different they are from other issuers, because the more that you're a one-off entity that is not easy to compare to other things, the more it's going to be a challenge to allocate resources to look at them. But to the extent it's a geo credit that maybe levies a property tax to support parks, I think that really would help to put them in the mix with maybe hospital districts or other tax-backed credits that are issuing in the market at the same time. And really, it elevates that profile where if you're looking at a list of deals that week and trying to assign the team to cover them in the best way possible. If it's a $10 million deal that's pretty far down the list, maybe it doesn't get covered. But if they have information that you think, oh, it'll take an hour and it might be an interesting opportunity, I think it's just that additional exposure that, maybe it means you get more bids on your bonds, and, hard to quantify exactly what that means, but certainly your costs aren't going to go up because more people are looking at your bonds.
Yeah, no, I'd say I would have responded exactly the same way, Jamie. I think it's an excellent point with that. Anything that can help open up the market and broaden the market for borrowers to come in and get better pricing and open up is going to be a benefit for them. I mean, the numbers I ran, and this is admittedly back of the envelope, but what was the issuance last year? It was like 400 billion. I mean, just a 1 basis point savings on that is billions of dollars of interest. I mean, and that alone covers, all the benefits and shows the benefit of having structured data and investors being able to have that and make that better bid for to pay just a little bit more for something that maybe they, as you correctly point out, might have just completely overlooked because it was too small. Now I can be a better bidder. Now I can come in and I can participate in that because I know the information is going to be there. And you as an investor can meet your reporting requirements as well. And certainly people are focused on the reporting that municipalities may be required to do. But if you look at what the SEC can leverage on the investment advisors and the mutual funds and can ask for way more detailed information than they may already be doing, that means we get to report better also. We get to say, hey, here's what we're doing. We've got the XBRL. We've run this through our processes. We've got our data team working with this, and we're on top of the investments, literally millions of holdings or thousands and thousands of holdings and billions of dollars that our investors have entrusted in us. And we want to make sure we're doing a good job too. And this helps us do it. It's not just as you put it up before, I've got, a spreadsheet 500 tabs deep that I have to find the one thing to go back to contest, say, a pricing or to try to make an analytic comparison. Now I've got a fairly good taxonomy, fairly good comparisons. I can show what's going on in the pricing. Things begin to align and stack up very neatly or neater to be able to report up to the regulators. And equally, I'd offer that the regulators can make better public policy decisions themselves because they have more data and they have better understanding of what the data is with that. And that makes, obviously, again, for a cleaner and more efficient market.
Yeah, I think to play off of your point and Jamie's earlier, even for infrequent issuers, maybe like a park district, if you can create a cohort of park districts, not as an investor, but as a governmental entity, and say, wow, I have, the most expenses relative to my revenues of all the park districts in the country, maybe I should call up, so-and-so who's managing this one much better. And so you may see cost savings from operational efficiencies, like you were mentioning about the mayor's conference. There's a lot of exchange of information, but it's really hard with all these tiny issuers to even know, are you doing it well? Are you in the top quartile? Or are you in the bottom quartile? So there may be non-borrowing pieces that can drive better efficiencies and lower costs in the future as well. But we don't have the data to do it.
Yeah. There's a really interesting question just came in. It says, please elaborate a bit more on how this, I assume that means XBRL and structured standardized data, can create more liquidity on bonds that are out there 2 to 3 years after their issuance. They've been issued, they're outstanding. How much of the data do you plan to use at issuance? And then park the bonds relative to the data to trade outstanding bonds for different outstanding bonds. And we all know a lot of, a vast majority of municipal bonds go into the vault, it closes the door, and the only thing you hear is accruing interest for the next many years. How do we address that? How does this data, how much data do you think they need at issuance? What influence does this have on potential liquidity? Thinking about how many retail trades are out there now.
I think you bring up a good point, Barnett, that we're talking about issuers and their costs, but there's also the buyers of debt, that if their cost of for an SMA manager who may trade small sizes of bonds, 5s, 10s, 25s, things like that, if their cost of execution goes down, that's more money in their pocket. I mean, 40 years ago it cost you $150 to do a stock trade. And today it costs you zero. So that's money that the actual investor keeps as well. So there's an economic benefit to the buyers of debt as well if liquidity goes up.
I think ongoing transparency. I'm sorry, Jeff, me.
Go ahead, Chad.
Ongoing transparency certainly helps the liquidity on your bonds in the aftermarket, right? So, for the issuers that are listening to us on this call, I mean, I would urge you not to think of just when coming to market and then you're done. You have to maintain, the communication with the market and then transparency, and again, having structured data would help you do that on an ongoing basis with that. And then for the next time that you come to market, the market already knows you. So that's the key to me is to maintain liquidity on your bonds in the secondary market. So go ahead, Jimmy.
Yeah.
Thank you.
Yeah, no, I totally agree, Chad. And just to add on to that, I do think there are some uni buyers who maybe have a reputation for, I think the questioner said, parking bonds. Our traders say when a bond gets bought by an insurance company, it goes to bond heaven and you never see it again. But SMA managers and mutual fund managers like us, none of the bonds are parked. We're constantly sort of, as we get flows in or flows out, willing to transact in anything, but a lot of it is subject to having somebody on the other side. So if it was a small issue that we did happen to look at, but then we bought the whole deal, so we've been surveilling it every year, so we know what it is. But if we wanted to sell it, nobody else knows what it is because they didn't own it. Whereas if it's something that's a little more spread out and it's easier for someone to say, oh, I see this bond is out for the bid. I'm interested in that type of credit. Let me quickly generate an opinion on it so I can decide whether to bid. the quicker you can make that process, the more people are involved, even in the secondary market, because right now, if the barrier is it's going to take one of my analysts 2 hours to look at this thing, if it's a $100,000 piece that isn't really going to move the needle on fund performance, I'm probably not going to ask them to spend that time. Whereas if it's a lighter lift, maybe I do. So I think that the more people can be involved in bid wanted lists, putting bonds out for the bid, knowing that they might actually get a bid on it, which maybe right now we wouldn't expect to. I think that's what's going to help the liquidity to the question.
Yeah, and on top of that, I think with the rise of algorithmic trading now, especially in smaller lots, the more data they have, they will refine their algorithms even better. I mean, I know I've talked to a number of them about financial data, and they're going to do something with it. They don't know what yet, but if they can make their models, even 1% more profitable, that's a lot of money in a given year. And that will increase liquidity, drive more people to do electronic trading. I think, and I'm not going to get it exactly right, but the bid ask for 100 bonds today is below what 1 million bonds was 5 years ago. So the market is absolutely getting more liquid, and the more data out there, it will continue to happen. I mean, I think munis are just 25 years behind the equity market, and now the equity market, I mean, is about liquid of a market as you can get.
I think there's another aspect to this. I'm watching the clock here as well, Michelle. You can get the hook anytime you need to. But the other aspect of this is, you're right. There are some bonds that go off to bond heaven. Jamie, thank you for that one. They go to bond heaven, and issuers may go, geez, I'm not borrowing again. I may not borrow again for another 5 years. Why do I care? The reason why you care is because even though those bonds are going into bond heaven, those bonds are priced mark to market every day. And that is a valuation issue for mutual fund investors who are looking for best net asset value for their shares. It certainly is for SMA investors who are looking to see what the best value is in their portfolio. It is certainly the case for insurance companies that have to report to their regulations as well to show that they have accurate valuations. And anytime there's more data and more accurate data, more structured data to apply to make sure those values are accurate, the bigger the benefit is. So just because you issue bonds and they go into the vault, doesn't mean that there isn't a lot of follow-up that go along with that, particularly for pricing, which is so critical for so many parts of the market with that. Michelle, we're kind of close here, right?
We are. I think there was one last question about is 2027 enough time given the learning curve that users and financial professionals may face when transitioning? I don't know if anybody has any final comments on that, and then we probably need to wrap it up after that one.
I'm not worried about it. Financial professionals will figure it out. If it's going to make them more money or lower their expenses, they'll figure it out.
Yeah, and I'm sure there are a lot of engineers out there that would love the technological challenge to do it as well. That's why we're seeing a lot of startups in the municipal bond market, more than we've ever seen before. I've got a Forbes article out on that a few weeks back with that. I think this has been exceptional. I cannot thank the panelists enough. I know Michelle will thank them again. And most importantly, I appreciate the large interest from our attendees, our audience, and the excellent questions that came in, and some of the challenging questions too. I mean, I think that's important to have people raising their hand and going, wait a minute, how's this going to work? I'm not quite sure. But one way or another, I'll close my comments with this. XBRL is coming. Technology wins. The muni market has to join the 21st century before it's over. Michelle?
Thank you, Barnett. I want to thank all of our speakers also, as Barnett said. And you did an awesome job and addressing a really challenging and somewhat controversial topic. I will mention that XBRL is not guaranteed to be the standard. It will be structured data, but there's still a lot that needs to be determined. But really appreciate everybody's time, and I'm going to share my screen one last time, really quick here, just to address a couple of additional programs that we have coming up that we hope that you'll all join. We have a webinar on identifiers for entities and securities in the FDTA. And that one's going to come up sometime in February. We haven't finalized the date, but we will, be letting everybody know about that. We're also planning an in-person event in Colorado, actually July 31st through August 2nd. And that's going to be kind of a workshop format on automating government financial data. And so, we hope that many of you will be able to join us in Colorado. It'll be a great venue. It's going to be at the University of Denver. And we're hoping to really have kind of keep the discussion going about like, what is this going to look like? What's going to be most appropriate? How can we really support the marketplace? Because we know there will be challenges for muni bond issuers, and but they can be overcome. They've been overcome in many other markets, but we want to do whatever we can to support moving forward. And this event has been recorded, and we'll get a link out to everybody with the recording, the replay of the event in the next few days. And please join us for our next upcoming events. And thank you all so much. You guys did an amazing job. Really appreciate our panel here.
Thanks.
Thank you.
Thank you.
Thank you.
Thank you.